If we were to ask you to give him a grade out of 10, what would you give him?
Well, I'd break it up into two things, Angie. In terms of, after the taper tantrum in 2013 and Modi getting into power and then fixing up the macro vulnerability indicators, I would give him a 9 out of 10 for that. The current account deficit has come down to just 1% of GDP we're forecasting this year. Inflation has halved. FX reserves have built up substantially. Growth's picking up. So I think in terms of, India is, in terms of vulnerabilities, I think compared to the so-called Fragile Five, I think India has done the best. So 8 out of 10 for restoring macro stability and strength. In terms of reforms, I would give him something like a 6.5 out of 10. There has been progress in things like removing fuel subsidies, in terms of opening up the economy to FDI, in terms of a new monetary policy framework that's been set up, and re-energising the ministries and streamlining it, and stepping up public infrastructure investment. There's been reforms, but I would give it only 6.5 out of 10. But actually, that's not bad. This is the world's biggest democracy, we've got to not forget. You couldn't expect a big bang of reforms, and I think that reality check is now starting to be understood by the markets.
But May is poised to record the first monthly outflow of money from overseas investors out of India. Why do you think perhaps there is a lack of enthusiasm, or perhaps a depleting enthusiasm for India?
Well, I think, you can look at month by month. There's not always, every month's not going to be an inflow. So I think the capital flows are often quite volatile, and it depends on what's happening externally as well. So I wouldn't pay too much attention to that. The way I think about India is, I think the policymakers led by Modi, but also Raghuram Rajan at the central bank, have been very far-sighted. And this is very unusual for an emerging market economy. India could have very easily cut interest rates, done a big fiscal stimulus, and let the rupee appreciate substantially. That could have led to a boom, but typical in EM, that would have led to a bust in a few years' time. I think India this time round is doing it very sensibly, and really trying to make sure inflation gets down to 4% and stays low. They want to get the fiscal finances in shape. And they don't want to use up all their competitiveness by letting the rupee appreciate substantially in the short term. So they are building up reserves. I call it India's Goldilocks economy, because I think growth is picking up, inflation's coming down, but without the punch bowl. I don't think investors can expect a quick buck from India. It's not going to be a boom-bust cycle. It's going to be a more long-term sustainable recovery, but it's going to be more gradual.
What's the next year going to look like for India?
Well, next year, I think we're forecasting growth of 8.3%, so almost 2 percentage points higher than China, where we're at 6.5. We think inflation's going to come down further. And the key thing, I think, is going to see if they can do some of these big reforms, like labour market reform, introducing a goods and services tax, and also the land acquisition bill. If they can get that through, it will make it much easier to do the infrastructure spending. But overall, if I was to look at India in the next 2-3 years, I think it's the biggest EM turnaround story out there.